Hello, everyone. It's Andrew here from the Market Mindset. Exciting times. This is absolutely crazy what's going on here in the market. We're very excited. Now, of course, there's lots of chaos as well, but that's what lends itself to precious metals. And today we wanted to really focus on silver's leverage, gold stability, and tie that in with BRICS buying, as well as just the overall lack of story in Canada to a large extent, because it's the retail is starting to come in, and I've heard some arguments out there too that retail is getting frothy, and that in some sectors insiders are selling out, which is not really true. It's not actually any evidence of that. But as gold is at 38.70 today, record high, just flat out record high. And we've talked to a number of people. It doesn't seem like that's going to stop going in that direction. Now, the pace is being very quick of late. And we like to remind people that the cousin to that is silver, and it's surged more than 50% this year, especially lately. And it's acting as that leverage compared to gold. And we're going to go into that a little bit more, because behind the tape, there's a big shift, and that is central banks. It is in large part BRICS, as nations are stacking gold at historic levels. And upon that as well, a very interesting play is the IPO yesterday of Chinese giant Zijin. Their IPO absolutely met with fanfare on the Hong Kong Stock Exchange. I think it increased 60%, a $2.2 billion float. And we'll get into a little bit more detail about that. But that's a huge sign. That's quite telling. Now, of course, a large portion of that is foreign investment institutions and whatnot. But right now, the current metal landscape, copper is doing well. Gold is doing its job as the ballast, to the overall economy. Once again, whether you like what's happening or you dislike what's happening, underlying metric is showing that there is uncertainty and chaos. There's too many big questions that haven't been answered. And gold is fitting that role and filling that in and providing the foundation for those that have been hearing that message for long enough, or just catching into it now. And once again, it's never too late. That anchor has been set by central banks for years. Even when I first started talking about this on a very small scale, 7-8 years ago, the focus was on central banks, especially these BRICS nations. Even though I wasn't necessarily framing them as the BRICS nations at that point, it was noticing, your Russia and China were buying a lot of gold, and there was even some, European countries repatriating gold. Not much was happening for silver for a long time, and we were lucky to be able to reach out to some of the experts that we know, like Chris Marcus, who was just on the other day from Arcadia Economics, Peter Krauth, who we're hopefully going to have on in the next weeks to a month or so. He's a very busy guy as well, and I encourage all of you that love silver to be following them, to look at their X and their Substacks and whatnot, because this is their sole focus, silver. And it's a great leverage story, because yes, the commodity is doing very well. Yes, it seems like there's a big short squeeze, but it has that tailwind of safe haven as a precious metal, but that extra let's call it torque, because it is an industrial metal, and it truly is. And it is a huge factor towards EVs. More your solar panels. That's really the big metric, but it does have a big part in EVs as well. But that solar component is significant. And once again, there's lots of stories about failed solar projects and this and that. And actually, we're working on a very interesting piece for our readers that talks about a big failure of one. There's been a number, but they're not for the reasons you think. There is a lot of wins in solar. We love all types of energy where they make economic sense, and where that's tool in your tool belt, where it fits best. And it has a place. It definitely does. And there's a reason why that silver is in demand to make all those solar panels. It isn't just as cut and dry as people say. This is too costly, prohibitive. This is better. there's a way to make a little bit of everything work as we transition over time, and to find what is actually moving that needle as far as emissions and whatnot. But right now, the bedrock people should be paying attention to is to be looking at that gold and silver ratio as well. So how many ounces of silver equal 1 ounce of gold? It's compressing. And historically, when that ratio narrows, silver outpaces gold. That's what's happening right now. And if gold is the heavyweight, steady and reliable, silver is the lightweight with knockout potential. So do we think there's still more room? Yeah, there's still more room, because there's more room in gold. And we like to frame this as well as we're not commodity traders. We're not a macroeconomic channel where all we talk about is policy and the larger theme of pictures. We really like to focus in on the biggest leverage outside of futures and outside of margin or whatnot, but looking at equity and looking at those operational leverage, or looking at exploration companies. So when we see that these companies that are producing, that some of them have been able to bring down their all-in sustaining costs, and they're going to be looking at their silver component, which some have bigger torque than others, some produce quite a bit. Their next quarterly earnings are going to be very interesting, and that explains the last year of a run in a lot of these producers, and the hope that that's going to continue. And I think most people would say, the future is looking quite bright for a lot of these glittery metals. Now, BRICS purchases, this is the largest buyer of the story as it is. China bought 13 tons in Q1, 2025 alone. Over the decade, quietly accumulate hundreds of tons alone away from the dollar. So this is a big shift of moving all of these tons away from the dollar that they're not feeling comfortable and so encouraged by, as well as the narrative. I mean, I think you've seen in Russia, there's claims, which I don't consider to be very accurate or realistic, that the entire plan is to create this digital dollar in order to deflate the debt and the currency. Is there something to it? Yeah. Could they be cooking something up like that? For sure. But it does seem when even the likes of a Ray Dalio, who from Bridgewater, ex-Bridgewater founder, used to be the largest hedge fund out there, when he is openly talking to, there might be a case for gold as being a foundation to the economy again. In any event, and whether you're listening to a Rick Rule or a Frank Giustra or any of the great minds out there that have been in this business for decades, they know what they're talking about. I mean, we don't have to go to textbooks and everything else, since we have living legends among us who are doing plenty of interviews and getting the word out, that there is a lot of opportunity in this market. There's nothing structurally in the near term, near sight, and by near I mean years, that shows that there's massive economic greatness coming. There's lots of positive. The AI story is real. It's going to add to GDP, but one could easily argue that just merely broadens the gap between those billionaires, the ultra rich, those that get to invest in the stock market, compared to those that don't. And that's a big factor. And we're going to get into that in a minute here, because there's some similarities between how you view how the West should be run compared to the East, and policy. But let's just kind of layer that first into talking a bit more about Zaijian, the monster Hong Kong IPO, 60% one day. And it's not so much the Chinese households, although there was some. Most of that sits in housing. It's kind of well known that the Chinese, they like gold, even retail, they like gold. They love real estate, and that's where almost all of their money. It's not in the stocks. But foreign investors, they liked it, and there's been a momentum of inflow there as well. And it's important to keep that in mind, because part of that CCP risk is embedded into any deal that they put forward. Now, that is a whole other conversation altogether, but it's something you have to keep in the back of your mind. That policy backing, financing, deal flows, diplomatic support, All of that is policy risk, country risk that has to be mitigated and understood. So whether you look at it from a sanctions perspective, especially with tensions rising high with the current administration, and even as far as Carney, there's a lot of tension as well. Justin had been very admiring of the communist system and very vocal about his like for it. Carney, not so much. He's not quite as embraced into it, and he's been, I would say, fairly much more diplomatic about the situation, and that's a positive thing. I mean, once again, he's being diplomatic about things, and I think you can say that that's not the case. Once again, whether rightfully or wrongfully, south of the border, where they acknowledge that there is a significant battle that's going on between superpowers. Canada is not a superpower, never will be. It has to play a role as more of the diplomatic type and to pick a side. And they're playing that role on the chessboard as they should. They're not making power moves. But what's interesting, and what one could make a bit of an analogy or comparable to, is that Canada and China actually, in some degrees, they do mirror each other quite a bit. Real estate is nearly 48% of Canadian household assets. Pensions are 23%, and non-financial assets are 13%. RSPs are the significant portion of that 13%. Now, why is that the case? The principal resident exemptions. I mean, that you get an exempt tax-free. Whereas if you invest in something, there's the regulatory burdens. There's tax on equity returns, but there's also a cultural norm that's been happening over a very long period of time, which I used to write about years ago and discuss. And it is this idea of encouraging people to get away from buying stocks to buying managed products. And part of that was the cost of trading became so cheap. It's not worth it for a broker who's advising you to sell you a stock. They don't make anything off it. They'd have to revamp and remodel things. A big broker or analyst firm, they're going to make a percentage of your entire assets of management, and they're going to blend that together. And that's how they get paid nowadays. It used to be that you'd get 5% of a commission on a trade in the 80s. And then they brought in mutual funds, and it was, I think at one point, like 10% you'd get for selling a mutual fund. Those days are very long gone, although there are deferred sales charges and there's other things that you can do. But that's a whole other conversation for another time. We're focused mainly just on the similarity between Canada and China. Are basically the citizens are invested in their housing. Also, the messaging in China is that maybe the market isn't that accurate and safe, whereas the messaging in Canada is you don't really have disposable income, and if you want to invest, you should just let the government do it for you. You should let a pension fund do it for you. You should pay taxes. You shouldn't be investing on your own. You shouldn't be trying to build wealth on your own. Whereas I would say that that's the worst message that you could send out to anybody. You should be very excited and interested as to where your dollars go. And that every dollar that goes towards tax is dollar that you could have been yourself investing, either monetarily in a bond or say a municipal bond to invest in the infrastructure of your neighborhood, country, state, whatever. It could have gone into AI if you thought, oh my goodness, I really believe in this. I want to spend money and invest in this. Your money that should be going towards you picking where you'd like to see it go is basically going towards taxes, in which case you've assigned someone else who you've basically said is better than you and smarter than you at applying that money on your behalf. And there is an argument for it, obviously, otherwise people wouldn't do it. I would say that has gone far too far in one direction, and that we really need to be taking responsibility for ourselves, for our family, for our friends, and for our neighbors, and taking care of yourself. And that narrative gold, it's barely out there in Canada. It really isn't. It's really this mining community that's aware of it. But you don't hear the government of Canada even refer to it. They're even terrified to even mention some of the projects that they're going to fund for copper, which are critical and absolutely necessary. And I do, once again, I want to see what the details are. And there is some pushback as to the legitimacy of those 5 projects that were picked as national interest. That's for another article I'm working on in our Substack. Make sure you join. But I want to give credit in the sense that there is the shapings of a plan that are coming together. I think now's the time whenever it's good to be critical of people and politicians, what they do. But at the same time, say, listen, is that exactly what I want you to do? No, but that's insane. I mean, that's an unrealistic expectation for someone to think that things should work their way. But they're kind of getting there, and there is a message getting across. Is it perfect? No, and it never will be. But at least we see that there is some movement here in Canada. I think a ton more could be done. So what I want to end up this kind of chatting about is that right now, gold does remain that anchor. We don't really have to, even with our subscribers, remind that is the story. Producers that we've been covering in our drill sheet analysis, we've been talking to our subscribers and mentioning about, have done outstandingly well. I feel right now we're going to do a lot more live stream to get out there, to get the message out, because there is a bit of FOMO, like even for me. But I want to share that FOMO, that fear of missing out, to show people it isn't all just tech right now. It isn't all that these big companies with in data storage or data infrastructure. Yes, they're the bigger stories because that's hundreds of billions, even $1 trillion type of conversation we're talking about. Those are headline news. Those are big deals. But the scale of mining, you don't need to have that big a deal. You need a considerably smaller amount of a deal for those stocks to move, and they're moving. And this is like the early innings of this. And do I think it's going to be one of these cases of all sails will rise or all ships will rise with the winds? No. You're going to get the case of, say, with us, with the top 10 scores on the drill sheet will likely be the companies that do exceptionally well. That's what that's the thesis thus far. And not necessarily out of a pure score, but for what the answers are revealing, what the near-term catalysts are, and for us to frame, out of these companies we like, how far are these catalysts away? Are they in 3 weeks? Are they in 6 weeks? Are they in 2 months? How significant are they? If they're a permitting issue and you have to wait for approval from someone who may not want your project being done, well, that's not really a stock worth spending too much time on. If it's something where, well, this is a $10 billion project in mining, that's likely not going to happen. So we try to use that model not just as the pure score alone, but to encourage people to come to us, to have the discussion, and also they can bring their own one as well. Say, hey, Andrew, what do you think of this company? I've had a lot of people reach out and just say, give me a quick score on this. And that's what we want to offer to people as well, and to open up that conversation, because it's happening now. And the sooner people focus in on these companies that have real projects with continuity, great teams, they're getting funded properly. All this is critical, but it's how they fund as well. That's key. And we really want to make sure that people are aware that right now, if they reach out, we can give them the top 3 scores that we have right now, as far as silver, exploration, and near-term developers that are quite interesting. Of course, we always encourage people as far as the gold story. And we're building this database out. It's coming along, takes a lot of work, but it's very cool. And we're showing it to geos, we're showing it to CEOs, we're showing it to all sorts of people. And we're getting a lot of great feedback. And once again, don't be shy, reach out to us. We want to hear the feedback from you. We love having you guys on and chatting with us. I'll probably not stay out quite as long today, but you're going to see a lot more of me, because we really want to get this message out to people, and not just to make a market, but to let people know that getting into some of these stocks, it isn't the same as buying Tesla at $400. You're bang for your buck on a real junior with a real story in a gold and silver market. That leverage and that metric of gain is significantly better. It's way better than thinking, do I think that NVIDIA is going to triple again? Could it? Yeah. I mean, who knows at this point? I mean, how things are going. There was excellent interview where he kind of says Moore's law is out the window as far as AI goes. And there is a lot of truth to this AI story. But once again, backing that AI story is mining. And the more we can get that out, the more you share with other people, and the more that you reach out to us, and we explain how this drill sheet works, and how it's more than just a 78 out of 100, which is, by the way, because I get some CEOs complaining like, oh, I got a 74 or a 72. That seems awfully low. That's pretty good. This model is very, very diligent and, let's just say, challenging on companies. It has to be. Mining is a hard business. So we don't want it to be too loosey-goosey and too upside. We want it to be more conservative and more like really drill down, because that's the expectation we want to set. And that will really, really hyper focus on all those companies that have a story that's real and that aren't missing a huge component. Because sometimes that one component could be so significant that you're left hanging. And we don't want that for people. And this will reveal the questions that need to be asked. And once again, if we've got tons of subscribers that all like the same story, guess what? I'll get that CEO on and we'll have the conversations and ask them the tough questions. That's what's so great about having this job, is that we get to do these interviews with them all the time. I get to hear from their perspective, and in a conversational sense. That's a lot better than just a 15-minute presentation at one of the great events that are out there, whether it's Metals Investor Forum or PDAC or VRIC or any of these. In any event, everyone, you're going to see a lot more of me doing these live streams to get you encouraged. We really would love the support if you share this with other people and say, hey, take a look. What do you think? And especially as far as these drill sheets, because we're getting these out. People are reacting very well. It's very cool what can be done with the model that we've made, that I can just type in a symbol and it's going to spit out a couple pages worth of detailed analysis on the geology, on the company itself, on the funding, and some of the key metrics that we need to look at. So everyone, have a great middle of the week. There's lots happening out there. And we enjoy all the feedback, and we look forward to chatting with you again real soon. All the best.